Oh, hello everybody. Listen, let's quickly talk about investing for retirement. The best thing is that most people have anxiety, so they don't know what to do, and the solution for them is to not invest or just to put the money on a CD or so, and they don't get interest of it. So that's really bad. So when you want to invest long term for your retirement, the stock market is a great option. Of course, it's not free and there are risks, so it's not completely risk free, and it will be shaky and there will be a crash, but you should look at it long term. And history shows us that it's a great tool to invest, and even so there is risk, and even so you will maybe experience a stock market crash, but you should see it as an opportunity. Once the stock market goes down, you just invest more and you keep on doing it, or you automate it and pay on a monthly basis. You invest into the stock market, like let's say $300 or $250. You buy an index fund, and besides the index funds, you can also add some rock solid dividend paying stocks. There are so many, like Johnson and Johnson and Procter and Gamble and Colgate Palmolive. There's so many. Think about all the others that are around for 100 years, maybe Exxon Mobil, and then the dividend you should reinvest, and it could be a machine. It's like it is an amazing machine long term. And you shouldn't look so much at the fluctuations of the price of a stock. Rather look at the dividends you receive every month or every quarter or every year, and just reinvest it. And people just don't get it. They make so many mistakes. They are just overwhelmed, and people don't have so much information, so that's why they make a lot of mistakes. They're too active. They buy high, they sell low, they trade too much, they buy expensive mutual funds. Most of them fail long term. They don't make the performance the benchmark is doing, because you have to count in the fees and of the fund management and the whole organization behind it. And so a better option is an index fund. Of course, there are fund managers, they are great and they outperform the market, but it's very difficult to find them, and they're very rare on a long-term basis. Short term, there are a lot of people that outperform the market, maybe on a yearly base, if you look back 12 months. But the problem is, do you want to invest in those that are doing very well for a year, and you don't know what happens the next year after you purchased it, the mutual fund? So I pretty much like low cost, like very inexpensive index funds as a core base for your portfolio, and then you add to it like rock solid dividend stocks, and that's how you build a great portfolio over decades. And if a crash comes, don't get nervous. If there's a crisis, it's an opportunity and it's not really a problem. The stock market always recovers, and it's just a fantastic tool. It's the best tool. I mean, if you want to avoid any risk, what can you do? Even gold is fluctuating, and real estate is not perfect. And so I think the stock market as an asset class offers you the best return long term, but therefore it goes up and down, and you have to deal with that stress, and you just shouldn't get nervous about it. And if you follow that plan, you invest on a monthly basis into a stock fund, you do it for 30 or 40 years, you will do fine. And part of it is also you have to be a saver, and you can't live above your means. If you do that, your retirement will be really badly, because Social Security just gives you maybe 40% of your last income, and so you need to fill the gap. So therefore the stock market is a fantastic tool. Okay, that's all for today. I show you here where I am, in a financial district on a roof. Okay, have a great day. Bye.